Good morning, good evening, good afternoon, wherever you are in the world. This is John with Tommy's Top Picks here to bring you your weekly market update. Kind of a mixed market this week. Just a little bit down, a little bit up. Nothing too crazy. There's a couple of things that stand out, and we'll talk about that. The markets in general are in a very odd situation right now. We're seeing a lot of uncertainty, a lot of fear in the markets in general, and we'll talk a little bit about the financial news that's happening this week that is worth keeping an eye on. But let's jump right in. Um, Unlimited boxes are moving upwards, oddly. We have Arcane rising 15.15% up to 99. I believe we talked about this last week, how this supply is just going to slowly run out, and we'll start seeing these little spikes up, and eventually we'll get a new floor. We'll take a look at the chart. We have downward pressures of markets, so this is going to be a less certain step up than in a normal market. So just keep that in mind. Anytime there's a macro downward pressure, it's harder for products to gain in value, even if there is a supply issue. It's just the way it is in markets, especially if it's an investable type product. Obviously, if you're looking at this from a pure retail standpoint, selling cards, etc., that's a different story, and this is primarily a player-driven market, so that is a factor to take into consideration, although I don't know if Arcane Rising Unlimited is mostly player-driven or speculative at this point, because it's been around for a while. Players probably have all the cards they need. New players may want it. It is a hot set as far as going backwards. If you're going to go backwards, Arc is definitely one people love to get first. Not sure. I wonder if anyone has a comment or insights into that. Do you think about opening arcane packs or not? I don't particularly, but I've been playing for a while. I got my Arc cards a long time ago. As player growth happens, then people might go back and get Arc. I'm not sure. It's an interesting quandary and question. I don't know if History Packs replaces the idea of going to buy Arc, and Unlimited, that is. Tales of Aria Unlimited up 18% as well, so two shining stars in this market that is mostly a downward trend. This is just that volatility we've seen for the past few weeks. They're just continuing along the same path. In fact, it ended up right back where it left off, 2 weeks ago. So, we had the drop and then back where it was, which is a little up from its historic. So we're seeing that upward pressure. I'm not really sure what that's about. Maybe, well, actually, you know what it may be? Some of these unlimited cards are worth more than the first edition cards. I have seen that in multiple cases. So it could be that people are just going for the box cracking and that sort of thing, because Unlimited Tales of Aria doesn't seem to be as prevalent in the marketplace as first edition. Moving on, honorable mention, Arc Unlimited case up 4.09%, sorry. That is close to the 5% marker for where we would mark it for the heat map, but not quite there, so honorable mention. Tales of Aria case is down 11, so with the prices of boxes up and the case down, we may have an arbitrage opportunity worth taking advantage of. We'll look at that in the chart just to see what it looks like, but it's probably not a big one. Never really is. So if you're dealing with shipping and taxes and all that stuff, probably not as useful as maybe a shop that can get this cheaper at a distribution level and sell at that price. That might make sense for them as a retail reseller sort of situation. They also don't pay taxes. I don't know if you knew that. If you're a reseller, you get a special license that basically gets rid of sales tax, because sales tax is a consumer tax, not a business tax. So it basically passes on directly to the consumer, and the middle person, the distributor, or in this case, the retailer, doesn't pay the tax. It's one of the reasons to set up a store, but it is a complex accounting and tax thing. So even with Tommy's Top Picks, even as we've talked about, selling boxes and cards and the like, this is one of the big steps that's like, it's not quite worth the headache yet, because there's a lot of stuff that goes into getting that certificate from your state, and I think there might be a federal one too. I'm not sure on that part. Anyways, Monarch down 16%. This is a continued decline from its previous peak. This is first edition boxes we're talking about here. This is getting crazy low. Tales of Aria is $6 cheaper, and we know these print runs are different. Tales of Aria had a lot more boxes. Only thing I can see here is usefulness, so player-driven market again, because Mon has two heroes that are essentially out of the format, and generally speaking, that is, and then two heroes that are not seen as great. Shout out to poor Bolton, because I was called out for not saying Bolton last week. Everyone knows Levia is a rough one. Bolton is, I would say, like middle range, like not terrible, but not a super, following either, right? I think Levy actually has more of a fan following than Bolton does, even though Bolton performs better generally speaking. But point being that nothing in this box is of great use in the meta right now. That could always change. So these sorts of dips are good times to take opportunity to do that. And I don't know the pull ratio on Monarch. It might be worth doing some research on. But look at the cold foils and see what Husk, although that's down, I know, and some of the other valuable cold foils from Monarch are at, because this price might make sense where if you open a case and you get a good cold foil, which I think you're fairly guaranteed per case, but like I said, do your own research. You open a case of this stuff, you find the cold foil in the first box or two, you sell the other boxes, however it works, right? There's different math to do it and different ways to approach it, but it might be worth it with the prices so low. Not 100% sure. Yeah, selling boxes probably isn't the answer because the price of the boxes is so low. You probably want to crack and sell the singles as best you can. But yeah, be aware to think of taxes. Think of fees, think of shipping. All those things need to be taken into consideration if you're going to take on that kind of task. And then storage. That's the hardest one. All right. First edition cases of ARC are down even further, down to $6,000. The lowest we've seen so far. Continual decline. I think this is just falling out. This is 24% down. I think ARC first edition is just going to continue to decline. I don't know exactly what's going on here. I guess too many speculators held it, and now people are just saying it's not worth it. I will say in these markets, it's somewhat understandable, and we'll talk about that in a second. But these days, we're seeing some better options for parking capital. So it's starting to change the direction where you might not want to keep it on a declining asset, even if this may come back in the long term. I personally am keeping all of my collectibles in there. I want it as part of my diversification, but that's generally on an overarching strategy that has other assets in place in the other categories. So as an individual who may not have enough money to move around, parking in a declining asset where you could be putting it in an increasing asset such as bonds, it doesn't make as much sense. I don't know that I would sell it at this kind of a loss, because whatever they bought it for, well, I guess if they bought it when it first came out, this is probably still a gain for them. But if you bought it anywhere above this, it's not worth selling at this point, right? I'm sure there's some people that have cases and cases that they've been sitting on since it was released, and this is still a very nice profit, and I could see that. That's the right move in that case, right? You still have it, it's declining, you might as well move it to something that's increasing, even if it's like cut it in half. Like say you have a whole wall of these things, you cut your supply in half, you sell them off, this is still a huge profit on what you got it for, because you probably got it for like $300, $400, maybe even $2,000. Let's say you bought it at a speculative point, but very early speculative point, right? So you got for $2,000, you threw extra money, right? You take that extra money, you still have a position in it, so if it goes back up, you're there. You take that extra money and you move it over into something that will yield over the next few months, because balancing the portfolio is really the key. That's the game, right? It's not about picking winners or losers. It's about diversification in a way that de-risks your overall return rate. That's that Sharpe ratio I was talking about. So something to think about for your own personal investments is what I do. None of this is financial advice, as always. So let's move on. Tales of Aria down 9.3%. Yeah, it's just the same volatility we're seeing in the boxes and the unlimited as well. So not seeing anything special there. Everfest is up to 238, 11%. Not sure on this one either. I'll be honest. It does look like there won't be an Everfest Unlimited. It was supposed to happen in September. We're now middle of October. No word, no sign, no nothing. So I'm guessing they'll just sit on it until there's some special event, return to the Everfest, return to the carnival some year later as an event or something, and they'll release them. I don't know. It's going to be weird though that the Unlimited will probably end up being rare, but we kind of see that in Tales of Aria, so I guess it's not that crazy. Uprising's solid again. We know this. This is just map. That's just what happens here. So, a couple news items I wanted to talk about. Inverted yield curve. This is something that most people ignore when they consider, is it a recession, is it not a recession? It's a little bit more technical and something most people are not super familiar with. But when the yield curve inverts, that typically means that the 3-month and the 10-year have gone into inversion as far as the yield amounts. So you get higher yields from faster time periods, lower yields from longer time periods, and typically, well, I would say 90% of the time, although I have not looked back at this to check your own math, that happens right before a recession. So when everyone was like, this is a recession, this is a recession, this is a recession, and I was like, it's kind of not. This is one of the reasons why. To be in an actual recession, there's usually other signs that come with it, and this is one of them. It has happened now. It just happened in the last week or so. So just take note. That does seem to be a big, strong leading indicator. So before the event happens, that a recession is coming. So I think it's pretty safe to say that we will be hitting a significant recession of some sort. Short, shallow, long, no one knows, right? No one can tell you the answer to that. But when this inverts, it's a key sign. Most of the time is correct. There have been false positives. There have been times when it inverts and we don't hit a recession. And then there's been situations where recessions have snuck in there and it was a delayed signal and stuff like that, which it could be as well, right? Because we did hear that it may be a recession, months ago. I don't think it was technically, it was close enough. A lot of people rule of thumbed it, whatever, right? At this point, it's more and more just like it's going to happen. And we've talked about this a little bit. The Fed is intentionally trying to hit a recession specifically to try to reset some of this stuff so we don't fall into stagflation, which is where we are headed currently if they cannot get this situation under control between inflation and growth. It's a bad place to be. You do not want to see stagflation. It's ugly. Couple things to think about and just kind of weighs in on this whole idea of is it a recession or not. Jamie Dimon, head of JP Morgan, master of the universe type financier, like he's top of the top. When he speaks, mountains move, sort of thing, right? He deals with more financial money than anyone else, and not anyone else, but he's a big player. And when he speaks, things happen in markets. One of the things he said, and this is, again, I've talked about this since the beginning, since this whole recession, quote unquote, debate came up. He literally was just quoted the other day as saying, serious chance U.S. tips into recession in the next 6 to 9 months. So even he's saying it's not really a recession yet, but looks like we're about to have one. So again, to point it out, the Fed is attempting to push us into a recession in a way that lets us reset the economy and kind of tighten up some of the monetary policy that's been happening over the past decades and get us into a situation where we can actually come back out of it faster. When you're at that level of economics, you have to choose the least evil, right? Stagflation would be by far more damaging to our economy. I mean, when that hits, and you can look into Japan in the 90s, you can look at us in the 80s. When it happens, it's a lost decade. That means a decade. Almost anyone who's in their major earning period is going to suffer significantly and have an incredibly hard time towards retirement because of the lost time on financial gain that they could have had. So what ends up happening is a decade gets lost, and that means anyone who's at that prime earning period is going to lose the majority of their upside over the long term because that capital just isn't being distributed to them during that period. There's a lot of complexity to it, but point being that lesser of evil is to hit a recession. Now, the question is, and this is where we get into this crazy situation, how do you know when you're about to hit a recession? Because the Fed acts, the economy reacts, and then it takes months before we see the numbers that indicate what happened. So if the Fed goes too far, you can do a global crash, which it seems a lot of people are starting to warn about. They're worried this is going too far. If the Fed doesn't go far enough, then you slip into stagflation, you lose a decade. So this is a very tricky time. We're right at the precipice of it. It is being dealt with as best as possible, but there is no textbook for this. There's no easy answer. Interestingly, we just heard from one of the Fed officials. There's multiple Feds. I don't know if you guys know that, but there's like a Philadelphia office, New York, blah, blah, blah. And they come together and discuss these things and then come up with a general policy that goes through all the different Fed banks that are regional, right? So anyways, one of the Fed officials, I forget which one, I think it was Chicago, but I could be wrong, basically said that they called it out in one of their, it's not like a press release, they have like official meetings and meeting notes and stuff. So during one of the Fed meetings, they essentially said, they called out the elephant in the room, as the article said, that a good chunk of our inflation, probably the majority chunk, is actually due to corporate price hikes, which are directly in profit, not in need. It's not because of supply concerns so much anymore. Now that we've gotten past a lot of the logistics issues we talked about before, they used it as an excuse to hike up margins even higher. Now, as someone who understands how companies work, sits on boards, has started companies, has sold companies, etc., I understand that approach to a degree, because you do, in a tough time, you want to get defensive, and by buffering your margins, that means the next unknown shock, because like COVID and logistics were an unknown shock that hurt them, the next unknown shock hurts less. So buffering your margins makes sense as someone who would be a corporate decision maker. Going too far, on the other hand, is what's causing this inflationary spike that, well, it seems that that's one of the arguments. There's multiple arguments, right? One of the arguments is that that's what's causing a good chunk of our issues with inflation right now. Wages have been pointed out as well, except wages have been behind for so long, so I doubt that's really the big inflation, because that's just going to catch people up to pay for things that they should have been paying for the past decade. Like putting some money away and stuff. So that's a tough argument, because there's been multiple studies on what happens when people that have been desperate for a decade are given extra money, and it's like they pay down debt. They do things that are very just basic and simple and not inflationary. So I find that argument hard to believe without deeper data. And I have definitely seen price gouging and corporate profits soar, as we've seen in the cardboard space. And Hasbro's, we're going to double profits every quarter or whatever it is. There's a goal there, right? And it's shareholder value, and I get that. But at the same time, there's a point where it's too far. And clearly, if it's shaking the entire economy, which it seems to be doing, all these core CPI products are basically soaking as much profit as they can during this period of uncertainty. It's starting to have an impact. So anyways, the Fed's calling it out, which is crazy, because that's not something the Fed would normally call out. So that does say how bad it probably is. So the data must be screaming this for them to even open their mouths about this in a public setting. So something to keep in mind. Pretty strange stuff. Pretty strange days. All right, let's jump over the cards. Nothing really special here. This did drop to 100, although we didn't get any sales at that price. I did see it for a brief moment. That's funny. Is their data broken? 10.5 was 145. I saw it listed for 100. It didn't sell, obviously. Well, at least it doesn't seem. Although this looks like it hasn't updated in weeks, and I can't imagine none of these have sold in that whole time. It's possible, but they were selling pretty regularly before that. Like, it's like every day at least one was selling, and then we haven't seen one sell in, 7 days? That's a little nuts. Okay, so anyways, it dropped down to 100 at one point. I did see it with my own two eyes, although the data doesn't reflect that. And then it popped back up. So I'm not sure what that was. Maybe there was some sort of crash and they have a circuit breaker. That'd be hilarious if TCG Player had a circuit breaker on their products. This price is falling too fast. We got to stop it. This is not the stock market, guys. It's not what it is. Okay. Yeah, we do have recent sales on this. I just want to make sure. Man, I hate the way this doesn't, I can't trust the charts. Let's see here. So 236 And cold foil says 229. So the chart's wrong on this. Yeah, chart's wrong on this. Anyways, so it did come down. It is ticking back up. I am more and more likely to buy this. I know I've said I would buy the cold foils at the few weeks into the next set, but this one is a generic head equipment, which we know stays solid, and we have seen nothing but solid pricing and uptick. Not that you can trust this chart, but the prices do reflect that same fact. I double checked it the other day just to see. I went through the data. And so I am more and more likely to pull the trigger on this sooner rather than later, because post Dynasty, this, unless there's another generic headpiece, is probably going to go up, right? I don't see this going down during that. This is going to continue to be a hype item, not a less hype item, until there's another one. Like Skullcap got replaced by this in a lot of ways. I just don't see it happening, so I'm probably going to pull the trigger on this one soon. I'll still hold off on all the other ones, as I said, because they continue to decline. Speaking of, this one I've been lying about accidentally, see, it still says 292, but it's not. If we put the cold foil on, oh God, I hate this, 218. Yeah, it's dropped way far. And I think last week when I looked at it, it was like 230, 235. So it's continuing to drop. There's going to be an opportunity here, and I'm guessing it's when the new set comes out. This will probably drop below 200, maybe the 175 range. And I'm going to try to snap it up then, unless something crazy happens, like this being super useful into it. But, we've seen Fables. They don't tend to be, right? Nothing else really surprising here. Pretty standard. I did want to take a look at this real quick. Their chart is probably a lie as well. So let's check the cold foils. And 147. Yep, chart's a lie. I hate that. I had no idea that this was always that wrong. It's not wrong on the smaller ones, or the deviation's much smaller at least. So anyways, 147 for the chess piece. Draconic equipment, not quite generic, but pretty good across Draconic characters, and we know we're getting a new one. I'm still going to wait on this because I don't think this will be the hype wizard product, for the Wizard Warrior Emperor, right? Wizard Warrior Emperor Drakai, right? He's all those things. Anyways, let's move on to the charts. Get through this real quick because there's not that much that's interesting. We went through the numbers. That's the key factors. WTR, no arbitrage opportunity. Oh, I did get the charts fixed. They are showing again. I'm not sure why that happened. It was really weird. Just Google things, right? Nothing crazy there. No arbitrage. Tightening up on the ARC cases as we saw, so we might get a chance of arbitrage, but the way these prices are moving, I question that. So we have the cases going up and the boxes are going up simultaneously. I actually think the spread will increase over time, but with volatility, you might get a week or two where you can get a shot at taking advantage of that. So keep an eye on it. If you're a shop or someone that has that kind of advantage, you can sell direct locally, etc. Mon, everything's okay, so we still have ARB on Mon, though it's tightening up. This is all unlimited, by the way, sorry. It's tightening up, but it seems to be trending in the way that you can continue to take advantage of it. So this is something that's interesting. We don't see this very often with the ARB opportunity lasts so long. I'm wondering if we can use this, like say you get 3 weeks of ARB opportunity, indicates an incredibly soft market, like the market is just going to continue to decline, in which case, not that you can short boxes, but you can position yourself to take advantage of the decline. That might be something worth thinking about, because I have a feeling that's a reasonable market thesis. We need more data to test it, but that is a reasonable thesis. Tales of Aria Unlimited is a non-existent product that no one buys. So let's go to first edition. Anyways, nothing crazy with WTR. Same as always. ARC, let's see what this chart looks like. Yeah, this is tightening up real tight here. This would be a crazy one, because if you get a momentary arbitrage opportunity here, that is something else, because it's a high margin product, a high difference. A few points could cover your taxes and fees pretty easily, because shipping becomes less and less of a percent, all those fixed cost things. So that might be worth keeping an eye on, but that does require that you're able to get a hold of it, which I think is the hardest part. Although I guess you can buy it on TCG Play for 6,000 now. I don't know. I think some of these have been canceled though in the past, because it looked like they sold and then they didn't. The sale went away. So I don't know. Hard to say with TCG Player. Too much of the data is hidden when it comes to high-end products that don't move that much. Nothing special on Crew, just continual decline. Monarch spread is increasing, so nothing there to worry about on first edition Monarch. Tales of Ares temporary ARB opportunity, $4, not worth it. And Everfest tightening. Oh no, we do have an ARB opportunity still. Okay, so here's the thing. Long term, let's see in the future. Let's pay attention to this. So long term ARB opportunity, 4 weeks now. Do we see a decline of price after this? I'm curious because I think part of this was tied to the second tier map. So we'll probably see stabilization. Actually, my prediction would be that this goes up, and we shift to the premium, the case premium, because I think this volatility was all around dropping to that second tier map, because first tier is 20% and then second tier is like 35%, and I think it just hit that second tier, but it still has a floor. So without a natural market decline capability, I don't think this will be indicative of a drop off like we saw with Monarch. So it's worth let's keep an eye on that in the future. It's a fun little pattern. Uprising, nothing special, just map stuff. And that is it for this week's update. I hope you guys enjoyed it. If you did, please leave a comment, like, subscribe, etc. Got a lot of traction on that Rudy product. What do you guys think of that Alpha Investments box and the openings that are going on? I got a lot of comments on that one, which I enjoyed. So please do leave comments. I do like to see them. I do respond to a lot of them. So yeah, hope you guys are having a good one out there, cracking packs, playing games, enjoying this hobby, not stressing too much about the economy. We are going to see some turbulence here, but hopefully we are able to turn around from it relatively quickly. My plan remains the same: diversified entry into the market on a weekly basis over the next 6 months or so. I think when I first talked about it was 10 months, so I'm sticking with it. I had a plan, I had the cash sitting there, and I took it divided by the 10 months on a weekly basis and said go harder when it's weaker, go softer when it's higher. And it looks like we're going to go weaker from here, so I'll continue to do that. It'll probably shorten my horizon from the next 6 months to maybe 4 months, whatever. I'm okay with that. This is all extra money. I will say the other thing I am doing is excess cash that's coming in. So from my own job and things like that, I am starting to accumulate that instead of putting it into fun and games and things that I want. I'm doing a savings kind of binge, if you will. And the idea is that I do see us going lower now with these indications of recession, like real recession, not soft recession. So by stacking cash, which is terrible in an inflationary environment, typically I will have more purchasing power during the highest dips. So as I was saying, as it goes lower, I'll accelerate. Well, and that would reduce that time frame. I want to have as much cash as possible available for that next 6 month period of putting stuff into the market. So I'm going to try to store more cash up as part of that. Continue to distribute into the market, again, on a diversified basis. Equities, bonds. I already have real estate. I'm not doing anything with real estate yet. That market's so slow. It'll probably be another year or two before I do anything, if anything. And then, crypto collectibles is my smallest holding. So that's the way I'm looking at it. I hope you guys find this stuff interesting. If you do, let me know. If you have questions, let me know. Happy to answer them. And as always, know this is financial advice. So get out there, have some fun, enjoy life, and I hope you guys have a good one. See you next time.